Alibaba is a Chinese multinational conglomerate holding company specializing in e-commerce, retail, internet, and technology. In the past few months, the stock increased a lot as a result of China's easing of the zero-COVID policy, boosting the whole market in the process. In its most recent quarter, Alibaba reported revenue of $29.1 billion, an increase of 3% year-over-year, and non-GAAP diluted earnings per share came in at $1.82, a 15% increase year-over-year. The free cash flow in the latest quarter was $5.02 billion, an increase of 61% compared to the same quarter of 2021, which is not bad for a market capitalization of $310 billion considering the micro and macroeconomic factors that affected Alibaba. In the first 3 quarters of 2022, Alibaba bought back shares worth $18 billion, as part of the company's $25 billion share repurchase plan. This plan was upsized in Q3, increasing the total by another $15 billion and extending its lifetime to 2025. As for evaluation, the company currently has the potential to generate around $22.5 billion in free cash flows per year, with a lot of growth ahead. For a market capitalization of $310 billion, that would be a price-to-free cash flow ratio of 13.8, which is very low for a tech company with such high potential. For reference, Amazon has a negative free cash flow of over $25 billion, while the company is worth 3 times more than Alibaba. It is clear that the market is very pessimistic about Alibaba due to China-related risks. Overall, Alibaba is a company with a strong financial performance and growth prospects, with a relatively fair/undervalued valuation. Alibaba's dominant position in the Chinese e-commerce market and growth in areas such as cloud computing make it a company to watch, especially if we enter into a recession. Make sure to subscribe for more quick financial knowledge.